Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, April 10th, and checking out the S&P 500 here. One thing I can say is we should be, as in maybe tomorrow, maybe the following day, sometime later this week, we should be in store for some type of bounce. This pullback has been long. We've been waiting for it for, let's call it, since the beginning of the year, 3 months until this actually came to fruition. And right now we've pulled back from 14, let's call it 1420 to 1360, a decent sized pullback, a little more than 4%. So what we're looking for here is to see if the S&P can hold these levels. On a yearly chart, you can see the support starts to kick in. If you look at volume, 1355 is when volume starts to get really heavy, all the way down to about 1300, with an emphasis on 1310 being the point of control. But that includes information from last year, so maybe we should exclude that information. If you look at this most recent rally of the S&P, we've really broken down from the 1388, 1400. That was big volume. We have failed from those levels, and now we're working on this volume here from 1372 down to 1337. This is the new S&P range for now, and looking at current price action, maybe we hold these lows, and we broke through 1356, which on this side of the chart is pretty good volume. In March, that volume is a little higher, 1360, and you have one decent sized volume bar here in February at around 1357 or so that does kind of give you this volume bar that sticks out, which kind of makes this its own high volume area from 1370 down to 1355 or so. Right now, we are balancing at the bottom of that range. From there, you look down to 1348, down to 1337 or so, and that's really your major support. And the reason why I say that is because look at where the point of control is for the last 90 days. It is at 1342, so it's not like we're just judging the volume for a month. It's the last 90 days. So you do have some significant volume here since this rally has begun at this 1342 level, and it's worth noting. So what I would say is we're due for some type of oversold bounce, and we'll probably bounce up towards 1373. At that level, that's where you look for the sellers again to regain control of the market and to see if they can push this thing further down. If they can, then your next level would be back down to the between this 1348 1337 range. But given this volume here at 1366, we could see a point of control shift, which would lead me to believe rather than this 1348 to 1337 level being the most important level, this 1370 to 1356 now becomes the most important to me. And I think it would represent the best trading opportunity, whether it's back up towards 1400 or down towards 1340. So it's just something to keep in mind, and that's kind of how I use the point of control in any time frame. So looking at some ETFs that we can cover, XLF is ripe for a bounce right here, right now, off the 1 year. You have $15, which is basically where it closed, to 1464. Huge high volume here, and we're looking for some type of bounce. So you wait for the bounce to happen, and then you go with those buyers. I don't care if you buy the 14 calls or the 15 calls that expire that week. The point is you play for a 3 to 4% bounce, and you sell into that strength. XLF on the 90-day, 1480 or so down to 1462. That's your high volume area. So maybe we get a little more downside. Regardless, you wait for the buyers to come in. Even if it's on a 2-hour bar, if it's on a 1-hour bar, I don't care. Just wait for the buyers on whatever time frame you operate on and go from there. So it doesn't really... the point is you're getting up to a level I'm going to bring up the daily again, where you can define your risk, and that's the most important part about trading. The XLE continues to fall through this 200-day moving average, 150. This is fine. This is actually not a bad thing. I would be looking at 66, between 66 and 67 to pick up XLE if you want to play for a bounce. The good thing about XLE is you should get a bounce from, let's call it 67 up to 70, 71. So if you can pick some names that still look to be in like an uptrend, those are probably names that you want to pick up on weakness for the best shot at potential upside. XLI, this is industrials, and what you're coming to is a very close, support level. Let's call it 35.25 on the XLI. That's the bottom of this high volume area. We're pretty close to it. We did penetrate the most recent lows today on fairly decent volume. So, you are breaking through support, and you also are breaking through or trading away from this 37 level, which is the point of control. If you're looking for a potential trade, look at Caterpillar. Caterpillar is close to the point of control of the year, close to the 150, close to the 200. Those are all around 96 to 95. If we start trading below, let's call it 98, anticipate some type of bounce in Caterpillar, even if it's right here, and you would be looking for a $5 bounce or so. One way to play that would be playing through option spreads, and you would go out to probably April expiration, which is not this Friday, but the Friday after, and you would be looking at the 100 by 105 call spread. If Caterpillar continues lower and you can get in at the 95 by 100 call spread, that one may actually work out better as far as a snapback back to 100 if it drops to 95. So the important thing, what I'm really looking for, is for the buyers to start to come in. Therefore, I can define my risk and go with them. Now, one thing to note is this is a counter trend trade as far as the most recent price action. We've had a lower high and lower low consecutively for the past month and a half or so. And, so the momentum short term is in the hands of the sellers, but long term, you can see, I'm going to zoom out one, you do have some type of range bound Caterpillar, and we're coming down to the 95. You can see how significant this volume is, and you can see how we've had trading opportunities every time it came to that level. So, and if you're a little confused, you had consolidation, a breakout, a test back of this 95 level, a successful move higher, a higher low, a trade straight back down to this 95 level, a nice trade to the upside. Back down to 95, what happens? We flush through it, find value at lower levels, have a snapback back to 95, kind of twice. Another flush, the flush ends up being a major low, a straight move back to 95, consolidation. You actually have you had a few selling opportunities at that level, and then it popped back to the upside, back to the very top of the range. Where are you coming back now? Back straight down to the bottom of the range. The last time that happened, what'd you get? You had a nice move. You had a $15 move to the upside. Should you expect the same thing? Really, I don't see why not. And you'd be looking to buy at the lower end of the range and sell into, in my opinion, into strength somewhere maybe halfway or 2/3 up to the top of the range. And I think this is a pretty good opportunity to take advantage of that. Remember, Caterpillar is trading at 100 right now, 17% off the high. So it's had a pullback, and that's just something to be aware of. XME, metals and mining, this continues to move lower, and it's due for an oversold bounce. Last time we were at these levels, it was good for a bounce, and that's just something to be aware of. Now, we do have lower highs that continue to press down, so maybe we flush through this level. It'll be, take notes on this. Realize, make sure you have metals and mining on your screen. If metals and mining are up tomorrow, then the market's probably doing okay. If metals and mining are pushing down below the intraday low today, which was 46.20, if it's below 46, you can probably bet the S&P is getting hit again, or maybe other sectors like financials are holding up the market by bouncing against these support levels, so only time will tell. Gold. This was one of the names that was up today, and pretty impressive. The fact that it was up $15 or so when the market was down, the S&P was down like 20 points. It shows you people are covering their gold shorts and, buying the risk off type asset, or, the inflation based asset, the fear asset, whatever you want to call it. It's a hard asset which people flock to in times of uncertainty. And basically, whenever the market goes down nowadays, that's when people start talking about gold and bidding gold up. So, looking at the gold futures contract, we are bouncing off some pretty important levels. Let's call it 1600 just because it's an even number. It was close to the point of control for December. I'll bring that over so you can see it. December's point of control, 1594. You had some high volume in both December and January that kind of tapered off around this 1620 level. You can see here you had high volume, both of it kind of tapered off. It was a swing zone in December, resistance at the beginning of the year, a breakout, a test, and then we had a nice move off that level. So looks like that level is somewhat in play again. One thing on the gold futures, we basically came down and tested the breakout level today from Sunday, and we tested it, and look at the move we've gotten off that level. Nearly 35 gold points. So that's pretty impressive to say the least, and I wouldn't be surprised to see more upside in gold. One thing to note, we are at the top of the high volume area. This 1670 level is resistance both in March and in the overall profile over the last 90 days. It is also the 1 year point of control. So I'm still a believer long term that gold will, 1923 is not the high in gold, and I don't think it will be close to that. I do think we're just going to power through those levels, so that's just my opinion. Another thing you can know is just looking at this on the weekly chart, 636, or let's call it 630. You can see it's clearly the bottom of this high volume, and that high volume goes up to about 1750 or so. So maybe that's a potential upside target on gold. Silver continues to hold this value area low. I'm still skeptical about this, and believe it could easily slice through these levels. But if you want to take note, looking at what happened in looks like January, you had big high volume that ended at 3072, and we'll just take note of it until the point of control level in December, which is around 29. If these levels hold, we could push back up towards 34. Not that big of a deal, but still, noteworthy. Agrium, I still believe you don't take your name off of this. You are at the point of control for the year, just something to be noteworthy of. Not necessarily saying that this will be the low here. We could easily press back down towards 80, but it's a level to watch, and maybe if we get a bounce, it's one worth buying. Apple trading off at 644 high today, holding April's point of control for now, 1625. As long as that holds, 1624 actually. As long as that holds, we're okay. If not, 600 your price target. Watch out on Apple if you're overexposed to the long side. American Express. This is falling down, and you need to be careful. Should have gotten stopped out today on at least some of your position, just to be just to keep your risk appropriate. This could come back down to 54 without a problem. I think that's a buying opportunity, but nonetheless, you don't necessarily want to take in those losses. Medifast, I still think you keep your eye on this one. Let the market, this is holding in pretty good. It's kind of holding in a 2-day range while the market continues lower. Let the market do what it's going to do. Therefore, when the updates come, this should be a name that outperforms to the upside. RIM, this may be interesting just to keep your eye on. I haven't kept my eye off it since the trade that we put on that failed miserably. But we could get some type of bounce here, and if we do, it may be a good one. Las Vegas Sands, glad I took profits on the call. The 57.5 calls from yesterday, and they ended up working out pretty well. Good for 50% gains, and the rest got stopped out today for 10% gains, which still not that bad given that the majority of the position was taken off into this strength yesterday, and the reason why I chose to do that instead of letting it run is because you have to think of rising tides lifts all boats. If you take that with the risk of more downside in the market, it just kind of bird in the hand, work two in the bush sort of thing. So that's really it as far as the market. Let me just bring up the 10-year, which looks like it's just going to kind of break through this range, and we're off to new highs on the 10-year note. And as far as the 30-year, we're trading against the point of control here. You know what this kind of reminds me of is the euro back when this level right here where you're trading. The only difference is the euro made new lows, tested, failed, and moved lower from those levels. This was basically a quadruple bottom, whatever you want to call it, a very important level in which we're trading off of. So maybe we make a lower high here, but regardless, if you look at the 10-year, that appears, at the very top end of the range, appears to be wanting to break out. So anyways, take care, have a good night, hope this helps. So what you should be doing tomorrow is looking for the bounces. Take them in the sectors that look like they're going to bounce. Financials is one. Sorry, getting sidetracked, but financials, yes, being one. Tech resources, not sure if I covered this, but up, call it 0.5% when the market was down 20 points. Other companies similar to Tech Resources, Freeport down 2.5%, Cliffs, that was down less than 1%, so that's something worth noting. So if you want to take a cheap shot, maybe maybe a 35 by 36 call spread in Tech Resources may do the trick, and you may, there's probably a 3-to-1 payout or something on that, and it may be worth it. So just an idea. So XLF, probably avoid XLE, and look for a potential bounce on Caterpillar. So take care, have a good night, talk to you tomorrow.